as with any other investment, particularly in the private market space, you have to do your due diligence. And if you or I don't have an expertise to read a 100-page PPM for an oil and gas deal, we need to find somebody that does, or just pass on the investment.
Hey, Matt, I'm so excited that you were here on the Conscious Investor podcast. I'd love to know, as would the Conscious Investor, what is it you do and how did you get started?
Julie, thanks so much for having me. It's great to connect again. What I do is I'm a private wealth advisor in Dallas, Texas. And how I got started, it's a bit of a circuitous path, but I'll try to condense it down into a short answer. When I graduated from college, I went to work as a financial advisor right out of school. And that path was challenging. And I went from, one firm, American Express, to another, Mass Mutual. Ultimately, I found myself working at the private bank for JP Morgan. It was a great experience, but ultimately I found that the way that we worked with clients there, it just wasn't how I wanted to work with people. I wanted to work in a more collaborative setting. And so I found my way to True North in, 11 years ago now. And it's just been a great fit. I could not be happier.
This is exciting because I've wanted to have the experience and expertise of a professional who understands paper assets and conscious investor. When I say paper assets, I'm talking about literally we don't even get papers for them anymore, but stocks, bonds, things along those lines versus a tangible asset such as real estate that we can actually go touch and see and experience. And so I've been really excited about this conversation, Matt, because not many people can speak from a professional expertise position on both of these topics, and really as to how should we build out our portfolio. And so I would love to, before we go into that direction, I just love to ask, what is it you like to see as you were working with clients? You mentioned that in the earlier days, as you were, starting your career, you were noticing, hey, I really, this isn't how I want to engage my clients. What is the difference between then and now?
There are a lot of differences between then and now, but I think primarily as I gained experience, I learned who I'm successful working with and who I'm not successful working with, and vice versa. And I think just as a firm, what we've learned is our ideal client is somebody who has already accumulated some wealth through their own human capital. And they have found, as many others do, that as they accumulate wealth and life gets more complicated, they are kind of in the middle, so to speak, and they're coordinating with their insurance person and their investment person and their attorney and their CPA and on and on and on. And they, again, our ideal client has discovered that, God, I would love to just hand over the reins to somebody else and delegate this to a trusted professional who can be pardon the cliche, but who can be that financial quarterback for me and just kind of run the show. And then we'll be in regular communication, and I can offload that.
This is really powerful. And I want to touch on, you said life, I mean, essentially, this is my translation, right? Life gets more complicated when you're successful. And I feel like I've noticed that people seem to believe, if let's just say, I'm going to use the lottery. Like, if I won the lottery, my life would be so much easier. I'd have all this money and blah, blah, and I always hesitate to say, or I don't hesitate to say, that's not how this works. It becomes more complicated. Can you describe some of those complications? Because I know that the conscious investor, is striving to build more success into their life. Conscious investor, you are already successful, and I know you want to snowball that. What are some of the challenges that, people face with that greater financial success?
Yeah. Well, first, I don't want to gloss over that, having more money, it handles the money problems. So that's a good thing. But, to speak to your question, some of the challenges that come up, I mean, there are many. And again, I recognize this is like the kind of woe is me problems of the 1%. But as an example, I was meeting with a client just a couple days ago at their estate planning attorney's office. And we're having discussions around, okay, my net worth is X, got a couple kids. How much do I want to leave to them? Am I okay leaving it to them outright? Are they just going to spend it all? Do I need to leave it in trust? If I don't take action now and the state tax law changes in 2026, am I okay knowing that my kids are going to have to stroke potentially a big check to the federal government for estate taxes? And so those may sound like nice problems to have, and indeed they are, but they're still problems. And they can create a lot of tension with people thinking about, yeah, I'd love to leave assets, money to the next generation, maybe to the generation after that. But what are some of the unintended consequences of doing that? I don't want to create disincentives for my children and grandchildren to work and contribute.
Mm, that's so true. Have you seen the movie The Ultimate Gift?
I haven't.
I highly recommend that you watch it because it speaks to exactly what you're talking about. And it's really, really fascinating and fun. Conscious Investor, check it out. It's one of my dad's favorite movies. And ultimately, spoiler, the one person that inherits, the family wealth is the most unsuspecting person, but had to earn it every
Mhm.
step of the way. It's fascinating. Definitely check it out and watch it. And those are not trivial questions. And to your point, they do create tension and stress. As parents, we want to take care of our kids, but having the wisdom and discernment to know what is the best strategy for our kids with this net worth that we have accumulated, like, that's
Exactly.
legit.
Exactly.
Yeah.
There's a book out right now you might have heard of called Die with Zero.
Everyone's raving about this.
It's come up in conversations with some clients more than I would have expected. And I like some of the tenets in there, and I see this with people that I work with, which is rather than thinking of I will save, 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 accumulate, and when I die, I'll then pass on to my children. Um, Most people that I work with, get a lot of joy out of giving to family, charities, what have you, during their lifetime, and seeing them be able to, enjoy the fruits of their labor rather than leaving it to them in their 60s or 70s.
Yeah, it's definitely a great concept, and it's made my 2024 reading list for sure.
Yeah.
I want to transition a bit and talk about, with your expertise and experience, can you give us an idea of what you would say a really healthy investment portfolio would look like?
That's a great question. I, as most people, I need to couch it with it depends, right?
Yes.
Depends on your age and lifestyle, et cetera. But a prototypical client portfolio for us, things that I've seen work really well in the last 5, 10 years or so is all of our clients, for the most part, will have a portion of their assets in public equities, public fixed income. We have a diversifying strategy that we use for clients that the ultimate objective there is let's dampen volatility in the portfolio, and we can actually benefit from inflation within that part. And then
Mhm.
we're also going to have, for the most part, a healthy allocation to private investments. And that private investments, that's a catch-all term for anything from real estate investments to oil and gas, private credit, private equity, venture, et cetera, et cetera, et cetera. But what we have found is those private market investments, not always, but often have a very low correlation to what's happening in the stock market or the bond market. And, one year does not a career make, but in 2022, as an example, when the S&P is down 18%, the bond market's down 13%, most of our clients, the private portion of their portfolios was positive in a meaningful way. and just really help to offset some, some losses in the public space.
Interesting. That's really fascinating. And you and I mean, we met at a real estate conference, which is super fun. I always appreciate meeting people in person. And it sparked a lot of interesting conversation. And so I love the concept of private investments and even diversifying within that private investment portfolio. So we'll park the, and I don't have all the proper terms. I call them paper assets. You're like, oh, you're so cute. That's kindergarten. So let's level that up. Give me a high school term at least for this.
I just public market investments.
Okay, so we'll park the public market investments for a moment and let's go into the private investment sphere and talk about that. Oil and gas is really an interesting commodity. It's not a
Mhm.
commodity.
Yeah,
This is me trying to sound as awesome as you.
yeah,
Okay. So
they're commodities.
but oil and gas, I mean, there's so many other ways. So within that private investment portfolio, if a conscious investor is trying to expand even beyond their real estate holdings, what would you suggest adding into that part of their portfolio?
Well, so we've been really bullish on energy for, gosh, the last several years. And we tend to have, I should say tend to, we try to have a bit of a contrarian approach. So I'm going to get the dates wrong, but in 2014, 2015 timeframe, the price of oil came down pretty dramatically. And so we used it as an opportunity to invest in some mineral rights interests where, quite frankly, somebody raised a bunch of capital and they're going out and knocking on doors and saying, "Hey, Julie, I know your royalty checks have gone from this to this. Would you be interested in selling to us for a lump sum?" And that turned out to be a really good investment. So clients are getting the proverbial mailbox money every quarter, checks are coming in. We still like mineral rights investments, so that could be something to investigate. Um, there are some energy firms, a lot of the energy majors who, I won't get into the politics of it, but have moving into ESG, like greener energy. And
Hmm.
to do that, oftentimes they're shedding what are now considered non-core assets. And that could be, a working oil well, a producing well that they just need to exit and put that capital somewhere else. We have partnered with other folks to purchase those. And again, it's a working interest, it's generating cash flow, and it's a great alternative to, again, to public markets.
Hmm. That's really interesting. Is there anything, by the way, when we were talking about mineral rights, I was literally going to lithium batteries and all these, just like that's where my head went. Is there anything to be wide-eyed about as, like as somebody is starting to learn about these? Are there any very clear warning signs as to don't invest in that one? This is what are we actually looking for?
Well, so great question. I was actually having a conversation with a CPA about this yesterday, who was talking to me about a different type of energy investment, more like in drilling wells, basically, because of the tax benefits from the depletion. And he said that he was talking with another operator who was telling him that if you read through the PPMs for many of those operators, there are just boatloads of fees hidden in the PPM,
Oh, wow.
upwards of like 20-30% per year. So yes, that
Whoa.
is a huge red flag. You've got to,
Okay.
as with any other investment, particularly in the private market space, you have to do your due diligence. And if you or I don't have an expertise to read I don't know, 100-page PPM for an oil and gas deal, which I don't, we need to find somebody that does, or just pass on the investment.
Hmm. That's so important. Oh my gosh, I can't even imagine fees that high. That's
Sure.
insane.
And they're in there, but you got to dig through and find it.
Yeah, piece it all together.
That's right.
Half percent here, percent there. It all adds up so fast.
Yes.
Wow.
And I'd be remiss if I didn't say that outside of private markets, I know we're kind of tabling the public space, but MLPs has been a space that we've really liked for the last
Okay.
handful of years.
What
So
are
quite simply,
MLPs?
it's an acronym that stands for Master Limited Partnerships, which is just the
Okay.
legal structure of the companies that basically they're operating pipelines. So they're moving crude and natural gas from point A to point B, and those pipelines operate basically like a toll road. So if I ship my crude across the pipeline, I have to pay you as the owner, and then you have to pay out a pretty meaningful portion of that to your investors, roughly 90%. So they're good
Wow.
cash flowing vehicles.
That's substantial. 90% payout. That's wow. That's really substantial. I really appreciate these different, options. And even with the MLPs, even though they're in the public market, I really appreciate just the exposure to this because it's easy for us to have tunnel vision and to just stay in our wheelhouse and be, oh, I only invest in real estate. It's the only thing. Well, yes, but we really want a healthy portfolio that's complementing everything that's taking place in the economy at any given point. So these are all really, really powerful. Um, when it comes to adding real estate in, is there any particular type of real estate that you have noticed that your clients hold in their portfolio that's more advantageous? Like what's your perspective on this?
Well, I don't know about more advantageous, but what I see mostly, and it's probably just because we're based in Dallas, which is a big, commercial real estate hub, there's a
Yeah.
lot of multifamily.
Mhm.
And then also industrial is pretty big here as well. There's
Mm,
a lot of a lot of industrial, a lot of warehouses around the airport, and
yeah.
then a couple of highways, kind of you know, the uh the last mile, warehouses for Amazon and others. That's been pretty popular the last, 3, 4, 5 years.
Nice. If we were to scale all of this down and distill it, and we say, okay, we have a middle-aged investor who is, you know, has been contributing to a 401k, or whatever policy the workplace offers, because there can be
Mhm.
different ones, right, over the years, but they know that's not enough. They have some discretionary cash. They're experienced and they've have a, little pool to the side, set aside. What would you say, would be the best allocation of to get ahead and to start snowballing that retirement or lifestyle that they want?
Gosh, it's a really good question, and you'd think I'd have like a stock answer, but I don't.
Well, it's so nuanced, right?
Yeah,
For everyone. That's why I'm like, okay, middle-aged person, let's say accredited investor.
I would say recognize that I have a bias of working with an advisor. So I'll speak to it from that
Sure.
perspective.
Yeah.
Um, I would recommend that that person look for again, I'm biased, but look for a fee only advisor.
Okay.
So somebody, and the reason that's important is if you are a fee only advisor, typically, as we are, you're held to the fiduciary standard. That's different from working with somebody at XYZ brokerage firm who's held to what's called the suitability standard, meaning that they can recommend something for you because it's suitable for your investment needs, but not necessarily disclose to you that, hey, investment A that I'm recommending pays me more than investment B, and that's why I'm selling it to you.
Can I
So,
ask you
yeah.
can I ask you right there about this? And I'm going to say this, and I don't mean this in any negative way towards the people at establishments that may work there. Okay. And take this how it is, like all my asterisks, right? Is that the difference between, say, if someone worked with Charles Schwab or Edward Jones, are they more of that suitability standard where that's how they operate versus the fee only advisors?
Um,
Or
I
can
don't,
you speak to that? Like, I
yeah,
don't
I
want to
don't know
pigeonhole.
specific to Edward Jones, but what I have found is that firms like that typically they'll be what's called dually registered. So they can be your financial advisor and create a financial plan for you, but they also will the industry term is they'll clear securities through a broker dealer. And so because of that, they can basically charge a fee for giving you a financial plan and then also receive commissions for selling you products. So again, it's kind of like reading through that PPM from the, the oil and gas operator. You just have to know, how is this person getting paid? What's their incentive structure like?
And with you, I am over clarifying this, but and with your firm, you are fee only. So it's, hey, this is, you are going to pay me, you're going to pay the firm this fee. You know exactly what that fee is, just like when we go to the dentist or something like that. We know what our fee is. We're going to pay that. And we're not going to be nickel and dimed, or someone's not receiving extra along the way because they have all these other agreements that we may not know or understand.
That's exactly right. And that follows through all the way through our private investments that we do for our clients. We don't participate in any of the underlying economics of those deals. So we're not getting a cut of the promote, nothing like that. It all gets passed through to the clients.
Okay, this is why Conscious Investor Matt is on the podcast, because I always say follow the money, follow the money. And to your point, and I appreciate that you even overtly stated, I have a bias. I have a bias towards advisors. I also have a bias. I have a bias towards advisors that are, it's a fee only structure. Because when someone is being compensated along the way and I don't really understand fully that compensation, they do have a bias. Whether they, as much as we want to say, oh no, I don't have a bias towards that, well, if it comes down to two different options and I know I'm going to get paid more on one, human nature is probably going to lean towards the one that you're going to do better at. And
That's
that makes
exactly.
me cautious all the time. So
Yeah. Yeah.
thank you. You're super
Oh.
rad. If you haven't heard that today. So then to also just to carry, I interrupted you, but I'm glad that I did, because I wanted to really make that clear, because Conscious Investor, a lot of you are working with traditional financial advisors that are receiving these other fees along the way. And it's really important that you understand there are other options out there that can, more than likely advocate you in a really advantageous way.
Yes.
So, okay, back down the rabbit hole we go. I
Yes.
forgot where we were, and
Well,
I
I
don't
was
usually
to finish
forget.
that thought. So the recommendation to to that individual is, so one, yeah, seek out fee only advisor who's held to the fiduciary standard. But then I would also ask him or her, just as you did, what does your typical client portfolio look like? Because I know your audience will get this, but my opinion is that if you're working with a financial advisor and your portfolio is wholly comprised of, again, publicly traded stocks and bonds, whether that be individual stocks, mutual funds, ETFs, et cetera, you're potentially missing out. If they are not able to get you access to alternative investments, whatever form that takes, I think you should be asking yourself why, and ask them why, and really look for somebody who can get you access to some niche opportunities that aren't available on the Fidelity platform or the Schwab platform, or et cetera.
Mm-hmm.
And then the reason is a couple reasons. One, for that, illiquidity for owning those alternatives, we should expect a higher rate of return. And then probably as importantly is, more often than not, they're going to have a very low correlation to the stock market, in particular, and the bond market. So again, in years like 2022, when seemingly everything is down, you have the opportunity to have some investments that are up and can kind of weather that storm a little bit better.
These are great questions. So we're going to be looking for a fee only advisor. We're going to find out what their typical client portfolio encompasses so that we can ensure that they understand alternative assets and they have those type of options available. I love this. Is there anything else that you would recommend?
Well, I feel like I just steered somebody into a potential minefield. And I say that because there's a lot of observational studies around the like dispersion of returns, and I'm getting into a bit of financial speak here, but the dispersion of returns in private equity in particular is much larger than it is in public equity. So said differently, I'm going to get the numbers wrong, but directionally this is the same. This is correct. In private equity, like the top quartile managers will generate roughly like 20, 21% have done historically. But the bottom quartile, it's under 10%. It's like 9 and change. Well, if you're in a private equity vehicle and you're getting 9%, give or take, you've just potentially tied up your capital for many, many years, and you're not really getting a premium relative to what you can get in the stock market. So it really behooves you and whatever advisor you're working with to really do your homework on who you're actually investing with, because that is just so important. You can't
Does
just
that happen?
blindly say, I want to invest in private equity or venture capital or real estate. It's, well, yes, but now we have to choose the jockey, so to speak.
Mm-hmm. Yes. So how much hands-on do you find clients should have in choosing the jockey? Is that more, should we rely on an advisor to say, okay, here are the options and here. So for example, right now I have a friend that has 1031 Capital, an investing friend. And I have great connections with people I know, like, and trust, great jockeys. And I've
Mhm.
reached out and I have some options. I'm like, okay, hey, here's this person, here are their deals. I can connect you up with any of them. I'm not getting anything off of this, but I'm like, anybody up against the wall with a 1031 timeline is like, how do we support them? Right. So,
Yes.
so is it more like that where, somebody can go to their advisor and you're going to present the options. Here are the jockeys. Here's why we like the jockeys, and here are the deals. Or
So again, bit of a long answer to a short question
yeah,
is we used to do it that way, meaning it used to
yeah,
be like deal by deal. So as something came up and I knew that you had an appetite for it, I would come and say, Julie, here's this multifamily investment that we're doing. I think it makes sense for you in your portfolio for this dollar amount, and here's why. And you would
mm-hmm,
say, yes or no.
mm-hmm,
Over the last 5, 6 years, we've really institutionalized that approach where one of the things that we do is every year we have think of it like as a best ideas fund. So
yeah,
we'll launch a new partnership every year. And inside that partnership, there will be anywhere from usually like 7 to 10 line items or individual investments. So what we've done there is one, you take that decision fatigue off of the client's shoulders. They say, yes, I'm in, this is part of my portfolio strategy, and I don't have to pick among these 7 names.
mm-hmm.
We've also simplified it so that they're getting one K1 instead of 7. Um,
That is so nice.
yes. And then ultimately, if they have participated in this fund for, 3, 4, 5 years, now they've got like this mini portfolio within their own portfolio
Right.
that has, maybe 25, 35 underlying names in there. So they're getting even more diversification across the spectrum. So really trying to, yeah, take that decision off of their plates and say, look, we've got an investment team with a great experience level, very credentialed. Let them do all the heavy lifting, and then we'll come and present to you. Here are the 7 ideas that made it through our filters.
I very much appreciate this. And I've even created content around decision fatigue. Conscious Investor, go back. You could just search, the podcast with decision fatigue. It will come up because it's so real in our lives. And
Mhm.
when we think about living high quality lives where we can be present, these decisions, going back to the beginning, right, of sitting down and estate planning, okay, more decisions, how do we leave this, wealth we've acquired to other people, like more decisions. So I really appreciate the efficiency of that. It shows a lot of care and consideration for your clients.
Mhm. And, there are times where clients, I shouldn't say times, frequently we'll have clients who will bring us a deal. Hey, my friend sent this to me. I heard about this at the country club, etc. What do you think? And not always, but more often than not, I'll be able to grab somebody from the investment team who can help me read through it and tell them we like this or we don't for these reasons, and
Hmm.
let them make decisions because that's not an opportunity that we sourced. So it's not something that we're going to, we're not going to charge them for that, but we want to be able to give that guidance so they can so we can help them make an informed decision.
Hmm. That's really nice. I mean, that's actually like the full white glove concierge service. Let's point you in the right direction.
We try. I think if the investment team heard this, they'd be like, "Stop, stop. We don't have that much time."
Right, right. Don't do that.
Yes.
We're busy. Stay away. I love that. As you are looking into, we're recording this at the beginning of 2024, as we are, looking at, what will, as we're looking at the year to come in front of us, is there anything that you would say, hey, it would be worth your while to research, because we don't want to put a burden of responsibility on you, but to research these type of assets or to diversify in this specific way in 2024?
That's a great question. I don't know if it's specific to 2024, but I think just largely speaking, forward looking returns or expected returns, again, in public markets, stocks and bonds are probably going to be lower over the next kind of arbitrarily 5 to 10 years than they were over the last 5 to 10 years. So I really think it behooves every listener to look at their own portfolio and see how much am I invested in the S&P, in the bond market, and how can I diversify my own portfolio? And that might be through real estate, it might be through energy, or some other means, but uh, it feels a little bit like the early 2000s to a certain degree. Coming off of a really challenging 2022, this past year, I think the market really surprised a lot of people. And if you kind of look under the hood, when I say the market, I mean the S&P 500. If you look under the hood, I
Hmm.
think a lot of people know this, but the top seven stocks in the S&P, they call them the Magnificent Seven, were up a combined like 70% on the year. And the other 493 names in the S&P were up like 5 or 6%. And it's kind of similar to the dot-com era in that these seven names are leading the market higher. Their price to earnings ratio, which is a measurement of expensiveness, if you will, of a stock, that collectively is roughly like 50 times earnings, which historically is really high. And if you look back at the dot-com bubble era, the high flyers then was like roughly 60 times earnings. So we've gotten into the kind of these nosebleed levels in terms of valuations, and but we're we're not very good at we people we're not very good at learning from history. We often will get caught up in the mania of right now it's AI. So God, I better buy Nvidia. Let's forget that it's up like 400% in the last year, and we just think that that trend's going to continue. So I kind of got off on a rant a little bit there, but I would just encourage people to look at your own portfolio and try to assess where am I maybe overweighted a little bit, and do I have some diversifying strategies in there? Do I have some private investments that can help to mitigate some losses if they come?
That's so, so wise. Even in the commercial real estate space, I've been saying all along, rents do not just go up. Like,
Right,
challenge your assumptions, please, everyone, and expenses will go up. So it's interesting because we have amnesia about history, and then we have this ridiculous optimism when things are
right.
going well. And I am a very optimistic person. You've been around me. I'm pretty bubbly and happy and optimistic, but I am grounded in the reality of, okay, to your point, .com is very real to me because I grew up in California outside Silicon Valley, and I just remember what happened in the real estate market specifically because my family's in real estate. And so it's just interesting. It's like, okay, just be aware, be wide-eyed about those type of things.
Right. It's like, when things are going really well, we can't imagine them going poorly. And conversely, when things are going really poorly, like we can't ever imagine things going well again. It's just, it's kind of hard to see the proverbial forest for the trees at times.
Yeah, definitely. Matt, this has been just absolutely phenomenal, and I appreciate the value that you have brought to the conscious investor. I think that we can run around in our communities and bump into financial planners very easily, and they're very good people. So I'm not going to say like they're very good people, they're very nice people, but I really appreciate this perspective. I appreciate that your firm, that you guys are fee only advisors, and just like that mitigates so much of the bias and such, and just this insight in that most people don't have into, hey, let's talk about this investment portfolio in a new way. So thank you so much for your generosity with your time and your expertise and just pouring into the conscious investor. Where can they, well, two questions. One, is there anything that you are like, no, we have to make sure we touch on this, Julie? There's one, this, I can't leave this episode without telling the conscious investor this.
Um, I don't think so. I mean, as I was kind of preparing myself for this podcast, I think that you and I talked about this maybe in Denver, which was the how do people move money out of an IRA into a self-directed IRA? And I hear that a lot on real estate podcasts and the like. And I think that can be a good strategy, but I would just caution people to just kind of pump the brakes a little bit when they think about directing their own dollars. Because I think there's this belief that if I can move my money out of my company 401k or my IRA and self-direct it, then I've just kind of unlocked the keys to the kingdom. And whether it's private markets or public markets, there are reasons why the average investor dramatically trails the index every year. And a lot of that has to do with just behavioral biases. And so it can be a little challenging, as we were just talking about. Hey, rents have gone up in a straight line for the last 8 years. They're probably going to continue that way. Yeah, this thing's trading at a 3 cap, but let me buy it. And we kind of, we can do a lot of damage by getting a little too caught up in that self-directed nature, right? It's helpful to surround yourself with people who have done it before, people who can give you some unbiased advice.
I value this. I recorded some content just last week on this topic. Not everyone should roll their 401ks or retirement accounts over. And there are people with so much knowledge and experience. And for better or for worse in the real estate space, sometimes we can really put a negative, bent on those, like, oh, well, they're directing it and you should do it. You could do it better. Actually, do I have the time, the talent, the experience behind me, the education that is going to allow me to outperform what they're doing? And as much as that is a great vehicle for some people, it's definitely not for all people, because you have to be hands-on and you have to be educating yourself and really going after it versus, okay, that part is entrusted to a team. They know what they're doing. I'm going to invest my liquidity. I'm going to save up if I need to, and then I'll invest in that way.
That's right. Yeah, there are no silver bullets.
Yeah.
It just takes, you got to play the long game.
Yes. Oh, I appreciate that. Matt, if the conscious investor would like to reach out to you, what is the best way?
So our company website, truenorthadvisors.com, and advisors is spelled ORS. You can reach out to me on LinkedIn. My name's a little challenging to spell. It's Matt, M-A-T-T, and my last name Borowski, Borowski. Those are probably the best ways to get in touch with me.
Awesome. LinkedIn is such a happy spot. So conscious investor, if you're not already on LinkedIn, why not head over there? It's highly professional and just very informative, fun. And you can connect up with Matt. You can connect up with me and so many other extraordinary people. So if you're already on LinkedIn, then make sure you connect up with Matt. Reach out to him. Let him know, hey, Matt, I heard you on The Conscious Investor. Thanks so much. And connect up that way. Matt, thank you once again for your time and your willingness to just pour into The Conscious Investor.
Julie, this was great. I thoroughly enjoyed it, and thank you so much for having me.
Thank you. Conscious investor, remember your adventure, it belongs on the trail, not in your investing in, not in your personal life. So make sure that if you are feeling like things are getting a little adventurous and you don't want that adventure, in your finances, reach on out. We need to have a conversation before you can come into any of our investments that we have. So make sure you find a time on the calendar so that we can talk. And if you need support on that, high performance professional level, like, hey, I need to make some movement there, reach on out. If I can't help you with your finances or getting that momentum, I know someone who can, and I'm very happy to connect you up with them. Until next time, health, mindset, and wealth. when we edit our future, we're actually taking ownership. We're saying, I don't have to have these thoughts swirling around in my head all the time. They're not taking me where I want to go, and I get to choose where I go. So let me change this thought and say, what is it I really want? Welcome back, Conscious Investor. Yes, you read this title correctly. This is the number one limitation that you face. I know that's a very bullish statement to make, that I think I know your number one limitation. And guess what? I'm pretty certain, I'm 99% certain that this is a limitation that you face because it is so common to humans. Before we dive into this episode, I wanted to just let you know that this podcast is sponsored by Three Keys Investments. And Three Keys Investments provides passive investment opportunities that provide housing for humans through investments in multi-million-dollar apartment and assisted living facilities. So you can say goodbye to the hassle and headaches of owning rentals and hello to living the life you want with the people you love, all while enjoying real ownership in real estate. And by the way, recently I've had more than one person come up to me and say, wow, it's been a year since I've seen them. And they're like, you weren't lying about some of the hassles and headaches that come along with investing in this other way. Tell me more about what you have to offer. So that's definitely a truth. But let's go ahead and let's dive into that one limitation that is common to all mankind. And this is a twofold. You know, I honor you. I don't want to hide anything. I want to give it to you straight up front and let you know that we're going to talk about the stories told to us, the stories told that we tell ourselves, and then we're going to talk about editing our future. Because guess what? We are the architects of our lives. Imagine that. That's massive. And it's very freeing and liberating when we understand that. Let's go ahead and dive into the first part. The first element is that our entire lives, we have stories that are told about us. And those stories are told to us. So this could technically fork into two separate items. I'm lumping them together. There could be the stories that, you know, other people, water cooler talk, you know, the Karens and Chads getting together and talking about us in the workplace or, you know, at the coffee shop, when you're sideline mom and dad, all of that. We could have people talking about us. Then there's this other way we can look at this, and they're the stories that are told about us, but to us. These are the stories I really want to drill into, because they're so impactful. They are deeply woven into the fabric of who we are as adults. It's amazing to think that the stories that the adults around us told us about us deeply impact our lives. You might imagine that I was told I talk too much. Yes, I was told I talk too much my entire life. I got detentions for talking in class. I was corrected on a regular basis about talking too much. It's amazing to think that talking is how I make my living. That is exactly what God had created me to do. It was just raw and rough back then when I was a child. You have too much energy. You talk too much. You need to follow the rules, which I was very, very much, and still am. I do like following rules. That makes me, I like being compliant with moral and ethical rules and following and walking, living in integrity. But there's another way of extrapolating that to be much more severe and being extremely rigid and regulated, overly so much so that it is oppressive to who you are created to be. I'm talking about the nickel and dime rules, particularly the ones that we find in schools. We won't go down that path. But I want you to think for a moment, what were some of the stories that were told about you to you? Some of those things that you were corrected on multiple times. And I bet the first thing that came to your head was, well, I needed to be corrected on that. Okay, yeah, that's true. But sometimes when the adults around us correct us on it, it's not in a productive way. And we want to dismiss it as, oh no, it's okay. They were just doing that. I'm not saying they're bad people. I'm not saying that they had malicious intent behind correcting you in anything. I'm just saying, how did that impact and influence you? This is something that I've become acutely aware of in my own parenting over the last several years. I really wish I would have known this sooner. I wish I would have understood this so much sooner, because I really squished our son so much for probably the first decade of his life. And that's really painful to know how much I was trying to contain him. And quite frankly, I was trying to contain him because of stories told about me. Keep the peace, follow the rules, fit in. Okay. I'm trying. I want my kid to walk and talk and dress and do everything in a certain particular way so that it checks the boxes of everybody around me. And that's what I did for the first 8 years of our son's life. I was starting to come out of it from after the 8 years, but it still, that's 8 years, formidable years, prized years. Trying to have him in that box, fit the mold. It's a lot of pressure, a lot of unnecessary pressure. So one of the best things that has happened is that I've evaluated the story I tell myself. So we can have those stories that others tell about us. And just to wrap that cognitive loop up real fast, going back to the stories that are told to us about us, they affect us, and they affect our belief in ourselves, and they affect the stories that we tell ourselves about ourselves. Maybe you lack self-confidence. Maybe you lack self-worth. What is it that you are lacking? More than likely, and again, this is not a blame thing. It's not you don't need to be upset with anyone. The purpose is not to go and be about anything, but it's to understand the history of us. You see, we're encouraged all the time to go and understand the history of the world because history repeats itself. Well, the stories that were told to us about us by the people in our lives who are shaping our lives are deeply impacting our life right now. In fact, the stories that they told and put on us, they have a story behind them. So those people had a story that was told to them about them. Maybe they haven't engaged that story, and so they're still operating from that same position instead of operating from a position of freedom. And it goes on and on and on. I'm actually reading a really fascinating book right now that dives into this concept. And I have to apologize. I typically have books right around me. It's actually inside because I'm in the process of reading it. So it's not at hand, but it's a book by Dan Allender. And it has to do with the stories that we tell ourselves and the stories and the pedigree of the stories. It's so important for us to understand because now we can shift. We can shift the narrative. But I'm getting ahead of myself. And I haven't finished his book yet, by the way. But it was really interesting because you and we talk about stories often on this podcast. And Super Rad Steve started reading this book and kept reading little parts to it. And I'm like, wait, hold on. This is what I talk about. I have to read more and hear his thoughts and opinions and perspective on it. And it's been very, very fun. Let's go ahead and talk about the stories that we tell ourselves. Sometimes we like to mask these as limiting beliefs. We like to just call them, that's just my limiting belief. So you could say the story we tell ourselves. We could say the belief we have about ourselves. We can call it a lot of different things. But ultimately, it's going to come down to what is it that we think truly deeply about ourselves. This might surprise you, but for most of my life, I operated from a position of I'm not enough. I'm not smart. I'm the bronze. I'm not going to be the gold medalist. I might get bronze, maybe fourth or fifth place, but I'm not going to be the top dog. I don't fit in. I had to engage these stories that I was telling myself. And by engaging those stories and owning it, I was able to transition into editing the story and editing the future. What are the stories you're telling yourself? And be honest. Because we tell ourselves stories on an ongoing regular basis. And most of the time, we are not raising our level of awareness. And so the stories are just going on. And usually, the crazy thing is that usually they're on a loop cycle. Just repeat, repeat, repeat. And it's like we're just brainwashing ourselves about an untruth about ourselves. When we want to go into editing our stories, now we can start thinking about not what do we not want? Well, I'm never going to be enough. What is the truth? What is the truth that I really, truly want in my life? Well, I want to feel satisfied. I want to feel fulfillment. For me, that would be the counterpart, the opposite of wanting to be enough. I want to feel that peacefulness. I want to feel that my efforts are enough. I was never valedictorian, and I was never the fastest reader. If you've been listening to the show for a while, you know reading has been a challenge for me. And the fact that I'm a voracious reader, it only speaks to how much I value what I gain and how I grow through reading quality books. It's not because I'm a fast reader or I'm a good reader. It's that I just know I need to be reading because I want to just continue the growth process in my life. I don't want to stagnate. I don't have to knee-jerk and try to grow into somebody really fast. And I don't need to transpose personal growth and development as an achievement and a badge of honor. I just want to enjoy this life. And that's another element of that editing of our future. When we edit our future, we're actually taking ownership. We're saying, I don't have to have these thoughts swirling around in my head all the time. These aren't productive thoughts. They're not thoughts that are helping me. They're not taking me where I want to go. And I get to choose where I go. So let me change this thought and say, what is it I really want? Okay, I want to feel like I am part of a community and that community values me the way I value them. I don't have to fit in. I want to feel valued. Okay, that's cool. And I want to see the strengths that I have. I don't have to be the smartest person in the room. I just want to see where was I created to shine and to contribute in a beautiful way in this world. As always, conscious investor, that doesn't mean that we're moving mountains and out in the limelight and speaking on stages. We're on the stage of life every single day. The humble lives that we live as we take our kids to school, as we, meet our friends and a loved one for lunch. That's the stage of our life. We are always on stage, every single one of us. Funny point, the part is that sometimes people think, in order for me to have impact, I have to be on a stage speaking to thousands of people. Actually, you're impacting thousands of lives on the stage called your life. You've got people behind you that are coming up in the ranks. You have people that you're impacting and leaving a lasting impression on all around you on a daily basis. And they actually say that your friends, 3 friends removed, actually it goes back to 6, are actually influencing you right now. So think about that. You are on stage in life. So we don't have to think, we have to do something magnificent. You being you, wholly authentically you, right here and now in your day-to-day life is you changing lives all around you in a powerful way. But we have to edit the story of our future. We have to edit the thoughts that we have. We have to edit how we're viewing ourselves so we can show up in that powerful way. That one limitation that we all have as humans is that space between our ears. If you're like me and you love reading your Bible and just getting to know God better in that capacity, you see cover to cover, there is like all of this throughout the Bible. There are always like, take the thoughts captive, mind your thinking. There are tons of proverbs and Psalms about what it is that you are thinking. You are with yourself 24/7. You are talking to yourself all the time. So be mindful of what you are saying to yourself and about yourself. Be mindful of the narrative, the story that you are creating in your life every single day. That's what I got for you, conscious investor. I just want to encourage you. You can edit the stories that were told to you and about you. That doesn't ever mean have ill will towards anyone. It doesn't have to be anything like that, because that's really generally not productive. But having an understanding and identifying, raising your awareness that you are understanding, oh, well, that was no wonder I'm self-conscious about talking so much. I was told that I talked too much all those years, right? So we can start editing those stories in a very powerful way. And we can start creating a very powerful future, the future that God created you for, hardwired with your DNA. Conscious investor, I appreciate you. I want to remind you that you can have preferred access to the Conscious Investor Growth Summit 2025. If you are interested, remember, first round is going to go first pick of the tickets is going priority access to those who attended in 2024. There are 150 tickets. That's all I'm going to offer this year. So 2024 attendees will have dibs. And then those of you who are interested and you're like, no, I want priority access, what you're going to do is you're going to text this number 208-944-1836. And when you text that number, you're going to put CIGS, SIGS, which stands for Conscious Investor Growth Summit. When you do that, you'll have an opportunity. It goes directly to me, to my phone. Like, it's not going out. It's not going to anybody in Timbuktu or anywhere else in the world. It's just coming to me personally. Okay. So I'm not selling off your information or anything like that, but I just want to make sure that if you are interested in that priority access to Conscious Investor Growth Summit 2025, shoot a text to 208-944-1836. You'll get a text message. Shoot me your email back. I will make sure that you have priority access. That means after people who came this year have had dibs, you get dibs on the next tickets. And I don't think we're going to be opening this up to Gen Pop. I think that the tickets are probably going to go pretty quickly because it was so powerful and transformative. Conscious Investor, I appreciate you so much. You are ambitious, and I really value how you are willing to engage yourself, to raise your level of awareness, and to impact your own life and the lives around you. As we wrap up, please remember, adventure. I was gonna mess that up. Does that make you feel better, Conscious Investor? Because you know what? Perfection isn't the goal, it's the journey. So here we go. Adventure belongs on the trail, not in your investing and not in your personal life. If you need some support, if you want to talk about your investing goals to see if our investments in Housing for Humans supports your investment goals, then schedule a time for us to talk about that. You'll be like, wow, it feels like I'm on the podcast. Because guess what? I'm me here, and I'm the same me everywhere I go. So that's who you're going to get. And then if you need some support and you're thinking, I really want to do some inner work and I want to work with a coach in doing so, then reach on out and let's have that conversation to see if we're a fit for each other. In either case, if we're not a fit, I have an amazing network of friends, and I'm very happy to refer people out to people I think would be a great fit. Until next time, cheers to health, mindset, and wealth.